This is the Retirement Mentality channel. If this is your first time here, welcome to the channel. If you're returning, thank you very much for coming back. Hopefully that means that you found value in one of my previous videos. This is a place where we want to change your mentality about retirement. Retirement doesn't happen the way that it used to when your parents thought of retirement. You don't work for 60 years and get a pension and a gold watch. Now it's about creating passive income, creating, income streams that can come in, help you save as much money and get as much income coming in so you can leave the rat race and exit with more time to yourself. A lot of people talk about the FIRE movement. I have a new video that's going to be coming out very soon on why I'm changing the acronyms of the FIRE movement. So if you haven't subscribed to the channel already, be sure you subscribe to the channel, hit the notification bell. You're not going to want to miss that video. I don't know when I'm doing it yet. I haven't written the script. As you can see, I do have notes in front of me. It's 2021 now, and it's a new year. This is my first video of the new year. I'm going to try to up my production value a little bit. I did a video a little while ago during Christmas time where I had the fireplace playing on the TV back here like Graham Stephan does and trying to pull some of that Graham Stephan energy, and people thought that was kind of funny. So since this video is about the future, I've gone futuristic with my TV prop. I also went futuristic with my shirt because I think things that are unneeded and unwanted will disappear in the future, like maybe collars. Why do we need collars? So this is my future shirt. So I'm upping the production value in 2021. I'm hopefully bringing you more content. Or not more content, but better content and more content. I'm hopefully going to grow my subscriber base so I can share all this wonderful knowledge with more people. So like I say, please subscribe to the channel. And if you do find value in this, please hit the big thumbs up down there. Give me a like so that this gets pushed out to more people. And if you stay till the end of the video, I have a special bonus investing idea for you that I'm not hearing very many people talk about that I think could be something that comes about. I don't know if it's going to happen in 2021 or 2023 or 2025 or never at all, but it's a new trend that I could see happening, and I want to introduce you to the thought of it here, and I want to do more information on it later. But if you stay to the end of the video, I'll tell you all about it. I want to tell you what I think is going to happen in the real estate market in 2021. I think it's going to be awesome. I've been predicting it ever since this pandemic started. I've done 3 videos saying there's not going to be a real estate crash. And I've been told all 3 times by numerous viewers that I was stupid, I didn't know what I was talking about, and they were gonna wait for the real estate to go down so they could buy low, and I need to learn how to buy low and sell high. And so far, I told all of them to subscribe to my channel because I said in 6 months or a year, 12, 18 months, I said one of them is gonna be right and one of them is gonna be wrong. And I told them to subscribe to the channel so that we could one of us give the other one a big I told you so. So far, I'm proving to be right. And so I want to tell you what I think is going to happen in 2021 now. I still have the same optimistic outlook. I'm going to back it up with 5 reasons that I think real estate is going to continue to go up, and why I always say the best time to buy real estate is yesterday and the second best time to buy real estate is today. So if you want to hear my 5 reasons on the future of real estate and why I think it's going to be positive, let's get into it right now. Okay, my intro went a little bit long there, so I'm going to just jump right into it. Reason number 1 that I think the real estate market is still not going to crash and things are going to continue to get better in the real estate market. And if you've been waiting to buy real estate, you better get off your butt and start buying real estate if you've got the cash and you're ready to go. I don't see prices coming down anytime in the near future. Here's why. Reason number 1, interest rates. Interest rates are low. Interest rates are going to remain low. They did a survey of the top 18 or 20 top housing authorities in the market, and they all seem to agree that interest rates should stay around 3% at least until the end of 2021. So low interest rates is going to keep demand high. And low interest rates means higher demand. It also means more cash flow. So it's going to get more investors into the market. Investors are going to try to buy more properties because interest rates are low, keeps demand high, keeps inventories low, keeps prices going up. So prices will continue to go up because of low interest rates because it creates more demand and makes it more attractive for investors. Which segues me perfectly into reason number 2. Lenders are going to loosen their belts a little bit. Credit's going to be easier to get. Money's going to be easier to get with low inventory, with high demand, with low interest rates, creating more high demand. It's a good environment for the housing market. It makes lenders relax a little bit and makes them loosen their purse strings a little bit, and it makes money easier to get. When money is easier to get, more people can qualify for loans, lower down payments, creating yet higher demand, creating yet lower inventory, creating an environment where prices continue to go up even higher. So, low interest rates and easy access to money are going to make even better environment for prices to go up and for it to be harder for you to get a house the longer that you wait. People also have a lot of equity in their houses right now, so extra added equity makes it less likely for foreclosures or defaults to be on a massive scale like all these YouTube clickbait videos are trying to tell you. So that's another reason that the banks see less risk in the market, which is another reason for them to make lending easier. Number 3. Working remotely is becoming the permanent, the new normal, the way people are the future of working. Working remotely is gonna change the landscape of commercial real estate, but that's not what we're talking about here. I don't get too much into commercial real estate here. When I talk about real estate investing, I talk about the single family housing market because that's where most people on this channel are interested in the information. So in the single family market, people who have homes aren't selling them because there's such a high demand and low inventory. Even though they could get top dollar for their house right now, they don't know what they can replace it with. So people aren't putting their houses on the market. These are the reasons that the inventory is low right now. People that have houses aren't selling them. People that have smaller houses are wanting to upgrade to bigger houses, so those houses are going onto the market. But with 1 or 2 people in a family, mom and dad, maybe both, being at home and working from home, you need more space. You might need 2 offices plus 3 bedrooms for your 3 kids, or 2 bedrooms for your kids plus 2 offices plus a master bedroom. So people are looking for more space. They're looking for bigger houses. People who are in the urban environments are looking to get out of those environments and move out to the suburbs. But the people in the suburbs aren't selling because those are the people that can't find replacement houses. So those are the markets that are really being driven right now. You know, the corner office in the high-rise building is not the way people work anymore. Now it's the office in your basement, or the 3rd, 4th, 5th bedroom you're going to convert into an office in your house. You know, people aren't commuting. They want a nice workspace in their house. They don't want to sit at the kitchen table like I am right now. So markets are shifting. People are moving, but the people in the desirable markets aren't moving because they're already there, whether it be people moving to the beaches or to the mountains or to the suburbs of the big cities. So those are the markets that are really getting tight. Even in the markets that, you know, people are fleeing the big cities. They are, and their inventory is increasing, but there's always going to be an endless supply of hipsters and youngsters that want to move into the city and experience that kind of lifestyle. So those markets aren't going to go away. They're going to take a hit right now. I think they'll come back. But you're not going to go into Manhattan and scoop up a 3-bedroom apartment for a record price. It's not going to happen. They're going to struggle, but they'll come back. The commercial, on the other hand, is another story. But like I said, that's not what we're talking about in this video. Number 4, real estate is a tangible asset. You know, through this whole event we've been going through, people have seen the volatility of the stock market. People have seen the volatility of their jobs, the volatility of small businesses. And real estate is a tangible asset you can touch and feel and see and go there and paint it and fix it and obviously have other issues. But it's an actual tangible asset. And I think, you know, when times get scary and uncertain, people like things they can hold on to and they can touch and they can feel. So I think that fact that real estate is tactile and touchable and you can see it and touch it, I think just the emotional aspect of that will make real estate a more popular choice of investing. I think that's kind of the reason gold does good in these times too. You can buy physical gold as opposed to just something on the stock market that you kind of disassociate with it. It might be a real company, but stock prices are being driven more and more by emotion, by the fact that, you know, the people get excited, like the news is driving the prices, not the price to earnings ratios anymore. So I think that scares investors who are, you know, smart investors that, you know that when things get overpriced, you know, you have fear of missing out kicking in. You got prices spiking with companies that their assets and their income don't match at all with the price of the stocks, where that doesn't happen as much in real estate. People think that we're going to get back to normal or the new normal or whatever they want to call it. But people are going to remember this event. I think about my grandmother in times like this, and she went through the Great Depression and she never threw anything away. She's from a time where you don't throw something away, you fix it. I remember she saved things like tinfoil. She had a drawer in the kitchen where she would take old tinfoil and clean it and wash it. And my mom still washes plastic spoons and silverware and paper plates. And, that older generation, they didn't ever throw anything away because they understood scarcity and that you cannot have those things anymore. The same as you might understand the scarcity of toilet paper now. I bet if you went and looked in your bathroom right now, you would find you have several months supply of toilet paper, even though it's in full supply right now. You just never know, and we don't want to be caught like that again. Those things stick in your brains, and I think that's the same thing that people will think with investing. I learned a lesson in 2008 when the market crashed and I lost everything. I went broke, 3 foreclosures, went to zero. Sheriff came and kicked me out of my house, and I obviously learned a lesson from that. Hopefully I did. I needed more equity and I needed more assets, more reserve. I needed reserve accounts and I needed more equity. I got caught with zero equity and no reserves to get me through a hard time of making payments with no income coming in. So that's what I learned from 2008. And I think that's what people are learning from this is you need a safe place to live. You need safe investments. You need a place to hunker down, even not from an investor's point of view, just from Johnny homeowner's point of view. You need some place where you could hunker down and get through a crisis and have room for you and your family so you don't kill each other. So those are things that I think this is going to stick with people for a long time. Number 5, the number of renters is going to increase. This is just, I think, the number of renters had already been increasing before the pandemic, but now with the pandemic, one of the reasons that I say that the markets aren't going to crash is because people have more equity in their homes than ever. Because after 2008, the banks really tightened up those purse strings and lending got harder and you had to put 20% down. The market's been really good for the past few years. So prices have been going up. Things have been appreciating. So you had 20% down. Now you have appreciation, plus you have debt payoff. So people have a lot of equity in their homes right now, unless they've been pulling out home equity lines of credit, which they may have been doing when this thing started. But for the most part, I think most people have enough equity in their houses. So even if they lost their job, if they got laid off, if their income's been reduced, if their business got closed, and they had little to no savings, they've got enough equity in their house that they're not going to just let their house be foreclosed on them. The market is tight. There's low inventory. People can put their house on the market and get it sold if they're in trouble, and they can take that money that they're going to profit, all the equity they're going to get when they sell it, and they can go rent something, and they can become a renter for a few years and then resave those savings that maybe they depleted and get back into the real estate market in a year or two down the road. So whether it's people the renters who are already renting, looking for bigger places or moving out of cities, those people are moving around, and the crisis could be creating more renters who maybe need to sell their house and pull the equity out. So those factors are going to drive rental prices up, which drives up more demand for investors. So it's just another vicious circle that's going to make the market go up and up and up and up. So I don't see any negative forces on the market right now. So the future for 2021 looks really bright. And if you're looking to get into the market, I wouldn't wait. It's like I say, the best time to buy a house was yesterday, and the second best time is today. Of course, like I said in my other videos, all real estate is local. There could be places that have depressed markets, but for the most part, I think real estate is going up. Okay, congratulations. You made it to the end of the video. Hopefully that's because you thought this was informative. I told you in the beginning that I had a new investing idea, strategy, concept for you that I was going to throw at you. I'm going to give you just a brief introduction to it now and talk more about it in another video, depending on what kind of feedback I get from you guys and see what your interest level is. And it's something I'm trying to toy with that maybe I could start with you guys. I don't know if it will work or not. My head is kind of swimming in this idea, but the idea is called tokenization. Tokenization is sort of the same concept of investing in a REIT or in fractional, like a timeshare, fractional ownership. Basically, let's say you take a $100,000 property and you get 100 investors to give $1,000 each, and each person owns 1% of the property because you have 100 investors. You could have 200 investors who each invest $500, and they would be a 0.5% investor, or some some sort of formula there. I don't want to get too far into the weeds, but that's the idea behind it. And as Grant Cardone does this, the REITs do this, that's the concept behind it. But I think maybe you could see smaller investors, maybe somebody like myself, who owns rental properties, who has a career in real estate, who has a track record of being successful, and maybe I could go in with you guys and you could invest on a smaller scale and we could buy a property together. And I think it could be a really good way for new investors to learn how to invest rather than paying $1,000 for a course. Maybe you could pay $1,000 if I had 250 people. We could all put $1,000 and buy a $250,000 condo on the beach and then split the profits at the end of the year. And I could walk you guys through it and you could see how I shop for the property, how I, found the home inspectors and how I researched the HOAs and how I looked to see, crunch the numbers to see what kind of income it could make. And maybe instead of just giving you a course, this real world look behind the curtain could be a better learning experience for you guys. I don't know if this is something I'm going to do or not. I'm just toying with the idea, but this is an idea that I think could catch on in the future. Leave me a comment down below. Let me know your thoughts if it's something you would be interested in doing, or if you think that sounds more interesting than just throwing $1,000 into a REIT. So micro scaling down to one property could mean more risk, but when you're investing a small amount of money, like $1,000 or $2,000 or $5,000 or $10,000 or whatever it might be, I don't know. I find this idea very interesting. I've read a little bit about it. So anyway, leave me a comment down below. Let me know if that's something that you guys like, don't like, hate it, love it. Let me know. And if you didn't subscribe yet, please subscribe to the channel and hit that like button and ring the bell if you want to get notified for my next video that I'm going to be putting out. And I've got a good one that I'm going to be doing about the FIRE movement as well. So thank you for watching and we'll see you in the next video.